Welcome into the reaction channel, folks. We have some major changes in regards to investor sentiment we've got to talk about at the top of this video and what it means for where the stock market is headed over this next several months span. So we're going to go through that at the top of this video. From there, I actually want to talk about Apple stock for a moment. And the reason I want to talk about Apple is this stock is on an 8-day losing streak, meaning 8 straight days the market has opened and Apple went lower. Okay, that's a pretty major development in regards to Apple. The stock has performed horrible this year. It's the worst stock out of the big tech stocks in general. So we'll speak about that. We'll talk about if that's an opportunity and where the best opportunities are, in my personal opinion, when it comes to big tech stocks. Okay, what are the best buys, risk reward profiles? Okay. From there, we're going to spend a moment talking about real estate. And the reason being is April existing home sales numbers, horrible, slowest pace since 2009. Folks, we're talking great financial crisis. That's how bad the real estate market is right now. It is devastatingly bad when it comes to trying to move a house right now, okay? And so I want to go ahead and talk about that. If I view this is a great buying opportunity for the next 6 to 12 months, all those sorts of things. And then ELF and NVDA are both reporting earnings this coming week. I want to talk about kind of my opinions on these two stocks, which of them is riskier, which one has more upside over the coming years. We'll get into all that in this video here today. I appreciate y'all for joining me on this Memorial Day weekend. I hope everybody has a great one out there celebrating this weekend. Only one thing only I need from you guys, and it's for you to hit that like button, smash that like button, hit that thumbs up button. I appreciate y'all for being here, and I appreciate y'all for doing that. Additionally, if you want to subscribe to the channel, we got a lot of subscribers now on this channel, 94,000. I appreciate every single person that joins me for these videos, okay? If you're looking to apply to join private stock group, private wealth group, pinned comment, click on that, fill the form. We'll see if we can get you access to that maybe a little later on this week, okay? Alrighty, so big change in regards to investor sentiment. Huge. So we have finally just flipped to slightly more bullish than bearish. Yes. Now, that's a huge, huge development, because if we look back at the sentiment data here, we can see we have been more bearish than bullish when it comes to AI investor sentiment and how investors are feeling on the stock market for the next, 6 months, essentially. Are they bullish on the market the next 6 months, bearish? We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. We had 15 straight weeks where there were more people bearish on the stock market than bullish for the stock market for the next 6 months, okay? Including, what was that, 11 weeks or so that we had 50% plus number, which is the most insane number ever. So we have finally flipped. Now, with that being said, even though we have more folks now on the bullish side than bearish side, it's not a very big margin. Usually there's about a 6.5 percentage point difference between the amount of people bullish on the market the next 6 months than bearish. Right now we're at 1 percentage more. Okay, so not a big number there. There's still a lot more people to bring over to the bullish side from the bearish side. So that's something to keep in mind. No, the other fascinating thing I just find amazing in regards to this, right, is you're looking and we still have way more people bearish than you normally do, right? Now it's fascinating because you look at the stock market since April 9, right? And what we're going to find is the S&P 500 is up over 16% since then, right? That's just a month and a half ago. The Nasdaq's up 22%. NVIDIA stock, which I put NVIDIA, Tesla, and Palantir here because I think they're 3 of the most important stocks for sentiment around the market and good vibes and are people feeling bullish or bearish, those sorts of things. NVIDIA's up 31% since that time. Tesla's up 46% since that time. And Palantir's up a shocking 53% since that time. So you had those huge, huge monumental moves, right? And yet still so many people bearish on the market. But we're slowly bringing them over to the bullish side, right? Slowly but surely, we're bringing them over. But it's fascinating to see that many people still bearish on this market. So if you're wondering where's the stock market headed, understand that all we have to do to keep this market momentum going through the summer and break through all-time highs and push the market even higher, right, is we just got to keep bringing these bears over to the bullish side. And remember, a lot of the people that are on the bearish side still are not usually the type of people that are super bearish on the market or perma bears or something like that. A lot of them are kind of those in-betweens that are just unsure. They don't know what's happening with tariffs. They're unsure. They're concerned. all these sorts of things, okay? And so understand we've had a flip now, but also understand usually when you have that flip, and here's the important part that everybody's got to understand here, what happens usually after you get that flip from more people, bullish now in the market than bearish, and it hadn't been like that for a long time. What happens? Well, what you usually find is you get a continuation of that usually lasts several months at least. Once you get that flip to first happen, like you would look back at many past times when you would finally get that flip, what you would find is then you had still several months ahead of more people continuing to flip. Like sometimes there could be a weird week or two where it would go back down, more people bearish some, but usually if you look at over a several month time frame, it builds. So if you're wondering, could we hit all-time highs and bust through them, right? It's very possible. Now is no guarantee, but it's very, very possible, okay? Alrighty, let's go ahead. Let's talk about some Apple stock. And by the way, let me point out one last thing here before we move on to Apple and these other subjects. Listen, man, I don't care what happens with the market deep down. Why? The market goes up. We bust through all-time highs. Boom. This summer, June, July, kind of like 2018. What happens? I make a bunch of money. It's great. Market goes down a bunch. What happens? I get to buy stocks for cheap prices. It's beautiful. Either way it goes, it's beautiful. And once you get into that mindset as a long-term investor, you can't lose. Because the market goes down short term, you get to buy stocks at great prices. You get a major correction in the market like we had, a couple months ago, right? You get a crash in the market. Sweet. I'll buy stocks for cheap, right? The only way you're really playing on like a concerned time frame is if you're already retired, right? Because if you're already retired, you probably just want the stock market to go up and up and up. But if you're already retired, then you might have a lot of money in savings and things like that. So if you structure things properly, you shouldn't even be stressing, even if you're retired, about the market going up every day. But if you're watching this video right now and you're 18 years old, 28 years old, 38 years old, 48 years old, even 58 years old, you shouldn't be stressing if the market goes down short term. Like that is what that is. That's just part of the stock market. It fluctuates. It's a roller coaster ride. You get market crashes, you get market corrections. That's all good. But if you got more income than expenses, you're always ready to buy. That's why I always say the number one key to being a successful long-term investor is what? More income than expenses. You're always ready to buy. Alrighty, let's talk some Apple.
Said this morning that Apple must pay tariffs of at least 25% on iPhones made outside the United States. And in comments this afternoon, he said rival Samsung could face similar levies. But can Apple realistically bring manufacturing back to the U.S. here? And what does it mean for investors if it can't? Tim, what do you say?
Well, I think investors aren't really even focused on this issue, and they have to be, but we thought we were at least away from it. And again, I say that because I think investors are more focused on the week that was also Johnny Ive, the week that was, effectively we just learned about at least a ruling on the services business that may affect App Store dynamics. The fact that we've been worried about gross margins, that we've been worried about the overall iPhone kind of unit demand, and that's something that I think is really overall then dropped inside of the AI story that most people feel like isn't really going Apple's way. So throw on the tariffs, and I get why the stock's under pressure. I think the dynamic here is one.
Okay, before we go further and we start talking about the stock, I think I got to say something very important here for everybody, okay? Listen, blue Colt, red Colt, okay? Listen, GOP, the Republican Party has changed. There's no doubt, right? This was inconceivable in past generations for the government on the Republican side to be telling companies, you can do this, you must, do this or do that, or, you're going to face these tariffs and all these problems, your disruption of your business model, things like that. Like, that was not a thing in past. And so the fact that that's a thing now is it's interesting. It's a change in the party. And I'm noticing a lot of changes on both sides, both parties. And I'm like, it's weird times, man, because we could end up in a situation. Do understand the parties have changed before. It wouldn't be the first time this happened. Like the traditional kind of Democratic more policies, you see a lot of those today. Those used to be Republican, and Republican used to be Democrat. It was weird. And so if we get a flip in this next generation or so, like that would be wild, man, wild. But I'm kind of seeing some things on the Democratic side that I'm like, wait, that seems a little bit more on the other side. And then now there are some Republican things I'm like, wait, No, the other thing is, the other part I do look at, and I say Apple has spent $600 billion or some crazy amount over the last 10, 12 years on share buybacks, right? Could they have brought back iPhone production back to the United States and used a portion of that capital? Absolutely, they could have. Absolutely. It would have been extremely costly. They would have, it would have been extremely costly. I'll just say that. But could it have been done? Absolutely. You could do anything. Like, you're going to tell me you couldn't bring it back? Yes, you could bring it back. But it would have cost them billions of dollars is an understatement. It would have cost them tens of billions of dollars, if not more than that, right? To have brought iPhone production back to the United States, and actually, I shouldn't say back to the United States because it never was in the United States, but just brought it to the United States. But the investors would have been like, why are we doing this? It's going to make our product less competitively priced in the market. It's not like it's going to function any better or work any better. And meanwhile, we want share buybacks. So the investors look at that and they say, that seems like a silly waste. So, but it's a tough ordeal, man. It's a tough ordeal, but it is what's going on.
Where we really don't know where this is going to end up, but I agree. It's going to be very difficult for Apple to suddenly change where their manufacturing is, even though they just told us they're going to be 50% India at some point very soon. And that's something that I still think is hard to believe. But again, the core for me was not the headlines today from Apple. It's what we had before we got here today.
Well, I believe...
Oh, and by the way, there's also a lot of propaganda out there right now that is silly. Listen, I'll tell you guys about some crazy propaganda that's going on out there around this whole Apple situation. They're talking about if the iPhone was made in the United States, it's going to cost $3,000. Baloney propaganda. No, it would not cost $3,000 to make an iPhone in the United States of America. They would get very efficient very quickly. Would it cost more money? Absolutely. There's no doubt in my mind that it would cost more to manufacture iPhones in the United States of America than India, than China. No debate. But would it magically go to $3,000 plus for an iPhone? No. That's ridiculous, okay? That's just like good propaganda to throw out there, saying people are like, oh my gosh, $3,000 for an iPhone, forget it. Keep them in India, keep them in China. Like, that's a crazy number, right? No, it wouldn't be that ridiculous.
Deserve some credit for trying to be nimble in terms of moving manufacturing away from China, kind of, strategically maneuvering with regards to its supply chain, making sure that that goods were headed for the U.S. were produced at
And I used to be a very large investor of a company that proved this point. Tesla makes the same exact vehicle in Shanghai that they make in, Fremont, California. Is it more expensive for them to produce a vehicle in Fremont, California, let's say a Model Y, than Shanghai? Yes, absolutely. Is it triple the price? Quadruple the price? No. And I can tell you a Tesla is far more complex, and it's not even close than an iPhone. Because you got to understand, a Tesla is an iPhone and a car put together. And it still doesn't cost 3x, 4x, 5x, these silly amounts that the propaganda is thrown out at you, okay? So could you make iPhones in the United States? Yes. Will it take a long time to get everything situated? Yes. Would it be more costly? Yes. Is it triple, quadruple, 5x the price? No. Propaganda, man. Propaganda. So just understand that.
Yeah, and just finding a way to at least on the surface, seeming like they were making efforts to comply with the new regulatory framework. And I think today was a bit of a shot across the bow, but I don't know how serious to really take the threat. It's almost as if the tariff thing has been kicked up again. 25% seems to be somewhat of an arbitrary number. Like, how realistic is it for them to be expected to kind of completely uproot supply chains and then move them here? Like, what are the cost implications? And for me, my real question is, are they really trying to circumvent the 25% tariff? Or is there a situation where the tariffs actually get raised to a higher level because they say, listen, it's actually more cost effective for us to just go on ahead and pay this tariff and keep our manufacturing where it is? And I don't think 25% is sufficient enough for them to even explore looking at manufacturing alternatives. So for me, it just seems like it's somewhat of a way of a governmental land grab. And to me, that somewhat flies into the face of the spending bill, the tax cut bill that we're seeing pass through the House. So for me, I really don't know what to make of it, because on one hand, it's like we're preaching fiscal discipline. On the other hand, we're looking at 3.8 trillion, and we're looking at this tariff number that seems to just be a drop in the bucket. And I really can't make heads or tails of it. For now, I really think the downtrend in Apple is just continued erosion of their underperformance on the AI front, and also some opaqueness around the whole Google situation.
Yeah, you know, another way Apple could kind of get around this situation that they could take a victory here, and then Trump could take a victory, right? Like, ultimately, I think what Trump really wants is he wants to be able to say, I brought iPhone to America, right? Like, I had it made in America. So, I mean, Apple could get sneaky here, and what they could do is just have much of the iPhone still made in, let's say, China or India, and then you kind of send a few of the main parts that are already put together to the United States. It's finished in the United States, so it says it's assembled, it's made in America, but really like a lot of the core technology and putting the chips together and everything like that, and the semiconductors, it actually took place in China or India. You just finish the product in America. But then you say, oh, it's made in America. Yeah, it's you know, stuff comes from all over the world, but at the end of the day, we're making the product, right? Look at our big factory here where, you know, it's just you slapping a few things together and kind of finishing off the product. So that's a way to kind of get around things. Now, next question here is Apple a good buy, right? Well, to answer that question, what you have to do, you have to compare Apple versus its other big tech peers. Because at the end of the day, when it comes to buying a big tech, you've got to compare them versus other big tech companies, because that's like, you got to compare Mag 7s versus Mag 7s, and does it make sense, right? Because you're not going to say, is Apple a better buy than, I don't know, Honest and HNST? Those are two apples and oranges stock, way too different risk profiles and upside profiles and all those sorts of things, right? So you got to compare Apple versus companies like Meta and Google. So my question to you is, Apple has a lot of issues. They have this production issue and the potential tariffs, and how are they going to get out of this mess, right? And Trump seems pretty on them right now. Like, he's kind of got an agenda against them. So they got a whole situation. And then they're likely going to face some major disruption questions over this next, I would say, 5 or 10 years, right? It's not happening this year, but there's no doubt with OpenAI acquiring Johnny Ive's company there's no doubt that OpenAI is going to push hard into hardware with, obviously, all their software suite over this next 5 or 10 years, right? It's very clear that Meta wants to push more and more into hardware. When you see, obviously, what they've been doing with, you know, Oculus since that acquisition happened, right? In VR and AR, when you see what they're doing with the Meta glasses, it's clear as day Meta's going to push hard into hardware over this next 5-10 years, right? And those are going to be two major competitive forces, and it's clear Google is there as well, and they're going to compete hard. And the issue with Apple is we haven't seen Apple ever have any success that has not stemmed from a product that Steve Jobs and Johnny Ive created. Every single successful product you've ever seen, like super successful product, every one that actually makes Apple the money, were all creations of Steve Jobs and Johnny Ive. And so can Apple do it without those guys? Because any products we see over the coming years that are going to try to compete with OpenAI, that are going to try to compete with Meta, Google, things like that, it's going to have to come from Apple's internal team that has nothing to do with Johnny Ive and Steve Jobs nowadays. And that's going to be interesting. Can they launch the next iPhone? And when I talk about the next iPhone, I'm not talking about the iPhone 18 or whatever the model they're going to be on. I'm talking about the next type of iPhone type product, the next type of iPad product that changes the game for the next, you know, generation, the next MacBooks and those sorts of things, right? Like brand new products that they've never released before, that have nothing to do with an iPhone, that have nothing to do with an iPad or a MacBook. That's going to be interesting, right? Can they do that? I don't know. We've never seen it before. They tried their VR product they came out with, right? Whatever they call that, Vision Pro. That was their first real attempt on a product that Johnny Ive and Steve Jobs had nothing to do with, a new fundamental product. Complete failure, complete flop. So, can they do it? I have doubts. I have real doubts. You know, Steve Jobs and Johnny Ive, they built a $3 trillion company. I don't know if these guys that are over there nowadays can do that, right? Now, when it comes to Meta, you know, it's a better buy. There's no doubt. It's a cheaper forward PE. You have less questions about disruption. Like, you have Zuckerberg there, who's proven time and time again he can get the company through any storms, right? Stay innovative, stay coming out with new products and services. You know, you can sleep well at night holding Meta, right? Better growth rates, right? Double-digit top line, bottom line. You look at Google, 17 forward P, Top line, bottom line, double-digit growth. And Google's a company that I see tons of innovation consistently coming out of. Like no disrespect to Apple, but it's not even on the same level as Google in terms of how fast Google, how many different services and new products Google comes out with every year and shows off versus Apple. It's like a night and day difference. So at the end of the day, like, I would much rather hold Meta or Google, right? Then we think about somebody like in Amazon, right? Amazon. You could say Amazon trades richer than somebody like Apple, no doubt, right? 31 forward P versus 25, but you're going to get, not even close, like far exceeding, like 2x the revenue growth and earnings per share growth that you're going to get somewhere like an Apple, right? And, geez, you think about a company that's going to be very hard to disrupt over this next decade. Like, could you disrupt Apple over the next decade? It's going to be difficult as well, but you could do it, right? If you can make new hardware products that are good enough that it eliminates the iPhone, right? Because that's the big key. You have to, if you can dent the iPhone business, then you can take a lot down in regards to that. Amazon, is there any real competitive pressure on Amazon for the next 10 years? Not really. AWS is the behemoth, right? You can't really compete with them in regards to that. And then, it's a backbone of so many companies and so much of the internet. And then you think about that e-commerce side of the business. You know how much money you're going to need? You want to try to compete with Amazon? Come on, man. You can't do it. So Amazon's really won the next decade, right? And then their advertising business is just beautiful. Now, obviously, Tesla trades at really high valuations, but Tesla's a whole different animal when it comes to this game, right? So then you can say, 158 forward P. So you can say maybe Apple's safer than them. NVIDIA, when it comes to NVIDIA, you're looking at a 32 forward PE here. So you're above Apple, but once again, you're getting likely better growth. And then look at who leads NVIDIA. Jensen leads NVIDIA. And you think about a man that is just, it's tough to compete with him, right? NVIDIA is a very, very special company. Like you could kind of say Jensen is arguably the Steve Jobs of the last decade, right? Like, you can make a very strong argument that the Steve Jobs of the last decade has been Jensen. Very strong argument. When you think about, really changing the world and really like mass adoption of products, NVIDIA has been that company, right? So that's my take on Apple. It's just better opportunities, man. It's not that it's a bad company. It's not like it's horrible valuation here. It could be a moneymaker. It's just there's way more money to be made. And it's like, do you want to make a little money? You want to make a lot of money? All right, let's talk some real estate, and then we'll get into NVIDIA and ELF earnings and my expectations on those stocks.
Hey, Carl, that's right. Existing home sales in April fell 0.5% to a seasonally adjusted annualized rate of 4 million units. Even sales down 2% from April of last year. The Street was looking for a gain of 2.7%, and this is the slowest April sales pace since 2009. This count is based on closings, so contracts signed in February and March before mortgage rates moved higher. Inventory jumped 9% month to month to nearly 21% from a year ago. 1.45 million homes for sale at the end of April, which at the current sales pace makes a 4.4-month supply. That is the highest supply in 5 years. More supply is starting to cool prices. The median price of an existing home sold in April, $414,000, up 1.8% year over year. Both the South and West regions did see prices fall. Now, homes were on the market an average 29 days, faster than March, but longer than April of last year. First-time buyers accounted for 34% of sales, a surprising gain. And activity is much stronger on the higher end of the market. Sales of homes priced over $1 million, up nearly 6% from a year ago. Those priced below $250K dropped over 4%. And Carl, one more note, the cancellation rate in April was nearly twice what it normally is. And the Realtor's chief economist says that may be due to the drop in the stock market.
Diana, thank you. Important numbers, Diana Oleg, watching existing homes.
So, is it a good time to be a buyer of real estate? Let's just call it over this next 6 to 12 months, right? Because I can't call the real estate market 2 years from now or 4 years from now. My guess is it will be higher, but at the end of the day, that's anybody's best guess. Because what are mortgage rates 3 years from now? What's the economy looking like 3 years from now? It's complicated, right? But over this next 6 to 12 months, I think it could actually be an interesting time to approach back into the real estate market. And if you're a real estate investor, look at some properties. And the reason being is there's a lot of properties that have now been sitting a while, right? And there's starting to be more fear in the real estate market because there's more fear in general. We looked at the AI investor sentiment numbers, right? Mortgage rates are insanely high. So people are very understanding that you need discounts on properties now at this point in time because mortgage rates are so high, right? And you can't assume these mortgage rates will be like this forever, right? A year from now, 2 years from now, 3 years from now, they might be way lower than what they are today. So you could always refinance. So in a lot of home builders have had very weak spring seasons. Hearing the commentary from a lot of these home builders, it's been a weak spring, very weak spring. It has not been an exciting spring. It's probably been one of the lamest springs in terms of selling new homes that these home builders have seen in a long, long time. So you can negotiate quite a bit with a lot of these home builders as well because they have certain quotas that they got to hit to keep these homes moving. And if they don't hit those certain quotas, right, somebody's head's got to roll. And so what they do is they end up discounting. So by the way, and that also means a lot of these home builders, don't be surprised at all if their margins go down over the remainder of this year. Don't be surprised at all, especially even going into next year a bit. I wouldn't be surprised if they have to do a lot more discounting, right? So yeah, I actually think it's the most interesting time to be looking at real estate in quite some time, to be honest, because you actually have some real negotiation power right now. And I think you're going to have this for like this next 6 to maybe 12 months. When mortgage rates eventually do drop down, I think things could switch there. So that's my 2 cents in regards to that. Okay. Now, ELF and NVIDIA, both are reporting earnings this week, right? Obviously, ELF matters for somebody like myself that owns ELF stock. NVIDIA matters for the entire stock market. They're night and day difference in regards to that, right? But my take in regards to this matter is ELF looks extremely well positioned. Now, do keep in mind, ELF has run a lot going into these earnings. Like, let me pull up ELF on a shelf here just to illustrate this point. ELF has outperformed Palantir, Tesla, NVIDIA, Nasdaq by a mile of the S&P 500. I mean, ELF over this time period is up 57% in a month and a half, right? Versus Palantir 53%, Tesla 46%, NVIDIA 31%, the Nasdaq 22%, and the S&P 500 16%. So ELF, I mean, it's run, which usually if a stock runs that heavy, it is a risk going into the earnings, right? But you do got to keep in mind in regards to ELF, like if they could have a good guidance number, a good conference call about tariffs aren't going to be all that meaningful to them, you could see $100 plus. Now, if the conference call is a little worrisome, if the guidance is bad, something like that could alter the stock, right? And you could give up some of those gains that you've gotten over this past month and a half, right? And maybe the stock will only be up 40% or something like that. But the moral of the story is here, ELF is not trading that rich going into this, and the expectations are pretty darn low for this quarter, for the guidance. Obviously, there's a tremendous amount of worries around the tariffs and all that stuff. So if they can just kind of mitigate that, things are better than expected. Don't be surprised if the stock continues to see momentum. Do keep in mind, ELF stock was $200 last year. $200. So a little food for thought there. NVIDIA, sets up pretty well into these earnings. My guess is their numbers are going to be great. My guess is guidance is going to be great. My guess is they'll be talking about they've already completely sold through demand for 2025. My guess is they could be even mention something if they really want to excite the market, talk about how they're taking already insane orders for 2026. Like that would get the market very excited because then that kind of mitigates some risk for next year as well to a certain extent, right? So NVIDIA sets up well. The issue with NVIDIA is not in regards to NVIDIA's business model. The issue with NVIDIA is around its stock because it's hard to get people really excited around NVIDIA's stock. It's hard to get them up to another level of excitement because they already have gone through this super exciting cycle of like the H100 chips and everything coming in regards to that and the insane growth rates. And so the story is just like, it's so good, but it's not like giving you the next level, right? It's like, you take somebody on a date and you give them the most insane date ever. Like everything is so perfect. You take it to the most insane restaurant and all the stuff, activities after, like it's so up here, you can't beat it, right? And so even though you could take them on amazing dates after that, it's like that first one was so ridiculously perfect that even though these ones are so great, it's hard to meet that expectation, right? That's NVIDIA. Like, they took everybody on the greatest date you could ever imagine, and even though now everything's still beautiful, it's hard to get people excited about that stock. It really is. And so that's why NVIDIA's, if you look at NVIDIA's basically gone almost nowhere for like almost a year now. It's crazy, man. Like, we pull up a 1 year chart. I mean, you go back to where the stock was back in June of last year, right? Which we're almost in June now. The stock's up 4%. 4%? 4%? It's getting beat by the S&P 500 since June. What? This is NVIDIA we're talking about here, getting beat by the S&P 500? But, going into that, it was in that super exciting cycle, and since then, it's been great, but it just hasn't been as exciting, right? By the way, look at Palantir since that time, up 418%. You'll be flipping my flapjacks. Oh, my gosh. So that's kind of what's going on there. NVIDIA should be good on their earnings. And then ELF, we'll see. We'll see what happens with the guidance. We'll see what happens with the conference call. If the guidance is good and the conference call is good, don't be surprised if you see ELF back over 100. If either of those is bad or not good, then, we'll continue to kind of flounder, and, we can call it anywhere between $70 and $85, something like that. So that's kind of what's going on there. Love AMD, by the way. Love AMD. Okay, guys, appreciate you joining me as always. Thanks so much for being here. If you're looking to apply to your own private stock group, private wealth group, you're looking to take your investing game up to a much higher level than where you're at right now, take things much more serious, learn how to scale, right? Get access to all my premium courses like Become a Master of Stock Market, Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, Financial Statements Mastery, access at 1000xstocks.com, which is a tool that I'm using here, including our search feature. We have our compare feature, which I was showing you there, which is very valuable to compare 3 stocks versus each other. We have our earnings call tab right here, and we're looking to add AI transcripts in here very soon. We're actually working on the feature on the back end. We have our SEC filings. We have projections. We have our intermediate projections. Additionally, we have advanced projections, which is if you really want to go insane with it and run numbers and save your files, all that good stuff. And then we have our financials, and we have our charts feature as well, which is just absolutely phenomenal. And then we even have our education section, our metrics section that teaches you all this stuff, right? Our education section is absolutely phenomenal. So yeah, all that good stuff, guys. Okay, that'll be pinned comment down there. Much love and have a great day.